All right, let's talk about Garmin. They just dropped their third quarter results for 2025, and it's a really fascinating story. We're talking about some serious record highs, but also a few strategic challenges. So let's dive right in.
So if you've got a Garmin on your wrist, maybe on your bike, or even in your boat, you are absolutely part of this story. So how did the company that tracks, well, everything, actually perform? The answer starts with a pretty massive number.
There it is. Garmin pulled in roughly $1.8 billion in revenue in just 3 months. And that's not just a good number, folks. That is a brand new record for their third quarter. We're talking a solid 12% jump from this time last year.
But you know how it goes. With any big company, that headline number, it never really tells the full story. To really get what's going on at Garmin, we need to pop the hood and look at all the different engines that are actually driving this thing.
So first things first, let's look at those top-line results. I mean, this really was a quarter of major achievements for the company, and they hit some seriously impressive milestones.
Now, what's so interesting here is the contrast. You see that record revenue and record operating income, which is fantastic news, obviously. But then, look at the pro forma earnings per share, or EPS. It's flat. Totally flat compared to last year. So what does that mean? It suggests that while the company is making more money, its profitability per share hasn't actually grown. We'll dig into why in a bit. And, maybe most importantly, they felt confident enough to raise their forecast for the entire year.
Okay, to really understand that mixed bag of results, we have to talk about Garmin's secret weapon, its diversified business model. See, Garmin isn't just one thing. It's really like 5 different businesses all under one roof, each serving a totally different market.
And this chart really shows you where the money comes from. The fitness segment, your running watches, your cycling computers, that's the biggest piece of the pie at 34%. Right behind that is outdoor, with those high-end adventure watches making up another 28%. So together, those two account for over 60% of Garmin's entire business. Marine, aviation, and auto, they make up the rest.
Now, let's focus on the big winners this quarter, because 3 of those 5 segments didn't just grow, they absolutely exploded with double-digit gains.
Just look at these numbers. The fitness segment is just leading the pack with a massive 30% jump in revenue from last year. Marine also had a huge quarter, up 20%. And the super specialized aviation segment, it grew by a very, very strong 18%. These 3 are clearly firing on all cylinders.
So, what's behind that incredible 30% fitness growth? Well, the company points straight to huge demand for its advanced wearables. They specifically called out new stuff like the Venu 4 smartwatch. It's just a perfect example of how hitting a home run with a new product can directly fuel massive financial success.
But remember how I said that wasn't the whole story? Yeah. While 3 segments were absolutely booming, 2 others were running into some pretty significant headwinds. Let's take a look at where the challenges are.
And here it is. This is the whole tension of Garmin's quarter laid out on one slide. On one side, you've got this incredible, powerful growth from fitness, marine, and aviation, but on the other, you have declines in 2 key areas. Outdoor, which is their second biggest segment, mind you, was down 5%, and the auto OEM business slipped about 2%.
So, why did the outdoor segment go down? This is a crucial point. It wasn't because of a lack of new products. I mean, they just launched the Fenix 8 Pro series. The real issue was that last year's product launches were so unbelievably successful that it created a really, really tough benchmark to beat this year. It's what you'd call a high-quality problem, but it's still a problem.
And this quote from the CEO pretty much sums it all up. Cliff Pemble highlights the exact story we've been unpacking, that strong growth in 3 areas helped offset the challenges in the other 2. And for him, this is proof of the strength of their diversified business model. One part of the business can have a tough quarter, while the others carry the whole company forward.
Okay, so we've seen the revenue stories segment by segment. Now let's zoom back out and see how all of that translated into the company's overall profitability and financial health. How did it all shake out?
This simple table shows a really healthy progression, as their net sales grew from about $1.6 billion to almost $1.8 billion. That growth trickled all the way down the line. Gross profit, operating income, and the bottom line, net income, they all saw nice little increases. It just shows that the company's managing its costs well even as sales are growing.
And what does a healthy company do with all its cash? Well, it returns it to investors. In this quarter alone, Garmin generated a massive $425 million in free cash flow, and they used that to pay a pretty hefty dividend to their shareholders and to buy back some of their own stock.
all signs of a mature, confident business.
So after a record-setting quarter that had a few twists and turns, what does Garmin think the rest of the year is going to look like? Let's take a look at their updated guidance.
Because of this strong performance, Garmin is actually raising its expectations for the entire year. They now expect to bring in about $7.1 billion in revenue and deliver a really impressive pro forma earnings per share of around $8.15. That is a clear signal of confidence, especially heading into the super important holiday season.
So when you put it all together, what do you have? You've got a company setting new records, and it's being powered by incredible strength in its fitness and marine products, all while navigating some very real challenges in its outdoor and auto segments.
Which really brings us to our final question. The fitness segment is clearly in a full-on sprint right now, but that can't last forever. The real test for Garmin is going to be whether it can manage those tough comparisons in its outdoor segment and navigate the huge changes in the auto industry, all while keeping that innovation engine running. Can this diversified model keep on delivering these kinds of record-breaking results? That is the big question everyone's going to be watching.